I want to go to Mike Block since Mike hasn't been here. Mike, we're going into the first quarter earnings season. What do we expect? Is the market still pricing in too much optimism?
It's pricing in a little less than it was a month ago when we made those highs after Trump's speech. So I think sector by sector we have to think about this. Tech earnings are going to be good, but the market's priced us in. We've had some pre-announcements from companies and some good earnings off the beaten track from companies like Micron. So expectations are high in that chip sector. Apple continues to perform well. The NASDAQ was up over 9% in the first quarter. Expectations are still pretty high there. Then you look at the banks. I've been really cautious on the banks. Sure enough, they have pulled back. Well, when I'm cautious on something that pulls back, I start thinking, okay, it's time to cover shorts and think about where we want to weight things. There's still some high qualitative expectations for bank earnings, but I think we could see some upside surprises. I know I've seen some clients getting back into these stocks, and I think it could be interesting there. So it's really all about sector rotation here. Maybe tech's a little ahead of itself, but maybe small caps, maybe banks, this is their time to outperform.
Yes, small caps underperformed in the first quarter
greatly.
as well.
If you believe in the Trump trade, you think that tax reform is coming. These smaller companies should benefit. They're not the ones taking advantage of tax breaks of the larger companies. We could see some outperformance there.
And some of the, I guess, caution in the small caps is related to the infrastructure spending, because that's certainly with healthcare kind of dragging, and then with the tax reform also second in line, you have infrastructure spending that looks like it's getting kicked into next year, potentially.
Well, that was already out there. So what I want to say is this. You had a lot of folks getting really worried about health care. We had that big sell-off beginning of the week. That was a buying opportunity. What happens in health care is not the same as what's going to affect taxes and infrastructure. I feel strongly about that. I don't think we could extrapolate one little snafu translating to others, and that's where I am.
Do you think that there will be a rotation in the financials? Because we talked about tech last week. Financials, worst performing sector in March, down about 3%.
Yeah, and one of the reasons why is regional sold off pretty significantly, but the big banks stayed fine. They didn't really go down as much as the regionals. And so if you do get tax reform, that will happen. Banks are actually supposed to lead up and get a 15% increase in their earnings this quarter. But last quarter, they actually tried to temper expectations because we haven't seen any of these policies take effect. But you want to stay with tech, the leadership. Why do you want to do that? Because they're generating cash flow hand over fist. They have pristine balance sheets. They're increasing their dividends. They're doing M&A. Just look at the names. If you look at the tech sector, the top two names at 15% is Apple. It had a great quarter. Microsoft is at 10%. They pay dividends. It yields 1.5%. So there's an underlying bid, and that's why they're the largest sector. But we have, you let in with the story, basically 6 quarters we've been up. But during that, there was an earnings recession. We actually are anticipating a 10% rise in earnings this quarter. That is actually one of the most modest expectations. It should be beat. We should see actually those expectations be risen as earnings start to come out and companies give guidance. Guidance will lead the market further. That's what you see with Lululemon last week. They lowered guidance.
That stock lost almost a quarter of its value in a day.
Well, well, you know, to build on what Kevin's saying here, there was a lot of expectations built in there. People love the company. People are enamored of it, just like perhaps with Apple, with Microsoft, with some of these other stocks. Expectations are very high. Apple, they're coming into the iPhone 8 here. There's a lot of excitement there. These other companies like Microsoft are benefiting from cloud spending. It all sounds great. How much is priced in? I think a lot is, maybe not all of it. But I think that's the issue.
I just want to point out, because the viewers certainly, these are large stocks, that heavyweights that individual investors own. They know the companies. Microsoft, Apple, Amazon, Facebook, and Google's parent, Alphabet, all hitting record highs in the month of March. So they're all like going great guns. And Kevin pointed out last week, a lot of the growth that people are betting on is coming from Europe. Right?
Yeah,
it's coming from overseas.
Absolutely.
See, I actually listened.
Thank you.
I actually have it here. Technology leading, growing earnings overseas. That was from his interview.
Well, that's a play. That's why people have gone into tech, because they actually derive about 50% of their revenues overseas. We've seen inflation come up. We've seen a rebound. There's no longer a negative interest rate policy over there. You're starting to see the ECB more optimistic. So that's why you can see it led the overall markets last quarter as well as the month.
real quick.
Yeah, the ECB is, they're getting more optimistic, but they're still dovish, which means it's still accommodative to business, accommodative to growth. I think European growth in general is understated. We could see some outperformance there.
And then how about here? Consumer confidence at a 16-year high, home prices at a 31-month high, and there was a record reading on a manufacturing index last week on manufacturing optimism, which President Trump pointed out.